local all morning. This is your Fox 9 Morning News.
Fallout from COVID-19 continues to rattle the stock market. After the break, more on how investors are looking to bounce back or stay above water. We'll talk about it all and all those events happening last week and what we can look for in the week ahead when we come right back. Well, in the midst of the coronavirus pandemic, investors on Wall Street taking quite the ride earlier this week. Markets saw the worst slide since the Black Monday crash of 1987, before the Dow saw its largest percentage gain since 2008. But despite the late rally, markets remain in uncertain territory. So what are investors to do? To help answer that, we are joined by Caissa Pedersen, certified financial planner and founder at Caissa Wealth Strategies. Thank you so much for joining us. We appreciate it.
Yes, thanks for having me on.
So that's the big question. Yes. What do we do? We're watching this all happen. It's going up and down, and we're kind of, things are changing by the hour. What do we do right now?
Yeah. So I think there's three main contributors going on right now. We have fear, first and foremost. The coronavirus has brought a lot of fear to the markets. And really what we know on that fear is the unknown. It's fear of what's going to happen in the next 6 weeks, what's going to happen in the next 10 minutes. What we do know is that a lot of large events have stopped. People are staying home. People are going to stay home sick. So the economic effect of that is going to be there's a loss of paycheck. There's a lot of people not out there spending. So the second contributor then is the consumer, and that's you and I. Spending money on goods and services is not out there in the community. So that likely will stall a little bit, and that's going to have a ripple effect on our economy, because our economy is predicated, 70% of our growth is from you and I spending on those services. And if we don't have that, companies are going to stall in their profits. And I think the third thing that the market is really nervous about, we don't have any data. We don't know how long this is going to last. We don't know how deep the coronavirus is going to go. Markets don't like that. So they're very nervous. And I think if you couple all three of those things together, we could have talks about recession a little bit then.
And that's the challenge, too, is because it is fearful for people, separating an emotional response. I mean, you don't want people rushing in and taking out their investments, even though for people, maybe if they're on the verge of retirement, or maybe they are retired especially, and they don't feel like, oh, I have years to recover, like somebody who's younger, you can see why they would want to do that.
Yeah, so I would have 5 tips for people, and of all ages and all portfolios. First of all, don't panic. Right now, this is an event. This is not systemic like we felt in 2008. So we will get through this. So panic selling probably will lead you to have some regrets. We're always recommending that you make your plans for your investment strategies when you're in healthy markets, so you don't have to knee-jerk when we're in sideways markets like this. Secondly, if you are feeling like you're panicking, take a look at your portfolio and see what is really making you feel that way, so that you know when we do rebound, of which we will at some point, you know what you want to go change in your portfolio. Just wait till it rebounds. And to give a little perspective, on average for the past 30 years, the market has always had an intra-year decline of about 14% on average. Through last Friday, we're down 18%, so it just puts a little perspective on it. The third point I would say, if you have a 401k, then keep investing. Don't be scared to invest, because as the market goes down, you're being allowed to buy on sale. So keep investing, and then when the market rebounds, you're going to be really happy with yourself that you kept on track. A fourth point would be people with accounts outside of their 401k. Young people, you have time to be long-term greedy. Jump into this market, buy this sale, and be long-term greedy. Our retirees, if you have some accounts outside of the 401k, one thing you could do is think about tax loss harvesting. So you can actually use these losses for good, and you can sell the loss, capture them, use them against some income on your tax return, but buy right back into the market, something a little bit different.
And say that again, tax loss harvesting. Okay.
Yes, and it's a win-win, because you get to capture a loss, offsetting some income, and you get to stay in the market while it rebounds. So it's really a win-win. And the last thing I would probably say is just don't panic sell, because if you panic sell right now, that means you have to make 2 perfect market timing calls, going out and getting back in. And I've been doing this over 20 years. I've never seen it done perfectly.
Yeah. Have you ever seen a situation like this, though? That's the thing, too.
This one's different.
This one's different.
We've had, it's the wild swings. It's the volatility, down 10% in a day, up 10% in a day. These are such volatile and wild swings. It's just different times, and that's why thinking long term is going to bode well for you.
And I imagine you've been getting a lot of calls into your office from...
We've had a lot of good conversations, yes, and it's the planning Planning really helps.
Yeah. Okay, tell people where they can find your information if they do have more questions or
Sure,
want to
our
reach out.
website is www.caissawealth.com, and that's Caissa. It's hard to pronounce.
All right, Kelly, yeah, as I've learned. All right.
Nobody gets it.
Kelly from Caissa. Have I said it right?
Caissa.
Caissa. Oh,
Not a problem.
Thank you very
Yes,
much, Kelly.
thank
We
you.
appreciate it. We'll get it on our website, and we'll get it right one of these times. Thank you again.
Yes.